SN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You're listening to the Financial Survival Network. It's Kerry, Lutz. It's Monday, January 26th, 2015. So, Euro, what's going to be? Is it stabilizing? We had the long dreaded Greek elections. The anti-austerity Syriza parties have taken control. They won, I wouldn't say resoundingly, but they've taken control, and now they're going to be dealing with the ECB threats and intimidation. Well, where's it going to go? John Rubino is with us of dollarcollapse.com, co-author of The Money Bubble. John, welcome. And hey, what's going to be?
Hey, Kerry. Well, I disagree with one thing you said about the Greek election not being resounding. There are 6 or 7 parties in Greece, and one party, the radical left party, a formerly radical left party, now trying to be a little more mainstream, got exactly half the parliamentary seats.
Right.
So that's a big deal in a multi-party system when one party gets close to a majority in terms of seats. So it then cut a deal with somebody from the right, with a party from the right, to give it a majority, and so it has a pretty good chance of being able to do what it chooses to do now. Without having to cut deals with the other parties. It can just generate 51% of the votes in any piece of legislation and get it passed. So they can do what they want now. And the question is, what do they want to do? They're clearly anti-austerity, which means they, at least based on their platform, are not going to go along with continued cuts in spending which impoverish the population and basically help the 1% in Greece and then the Troika, the guys running Europe. So now the negotiations start with the European powers, in which Greece says, okay, you have to cut us a huge break on our debt or we're out of here. And now Germany basically has to decide which of those alternatives, neither of which is a lot of fun to contemplate, to accept. Because if they let Greece leave, then that means all of the Greek debt that is now denominated in euros will be converted to drachmas with a 50% haircut. And that hurts the big banks in Europe, which have lent a lot of money to Greece. So now you've got big banks taking massive write-downs and sometimes being below their capital requirements and having to raise capital in a tough market and all that. And you've got the other peripheral countries maybe following Greece out the door. So that's a recipe for chaos. On the other side, you've got Germany basically taking Greek debt onto its own balance sheet as a way to ease the burden on Greece. And then Greece then recovering a bit because its debt load is so much less onerous and things getting a little better for them. But then you've got Italy and Portugal and Spain and Ireland and several other Eurozone countries lining up for the same deal. And then you're talking real money because those are much bigger economies generally than Greece. And so you end up with, if they continue down that road, the fiscal consolidation that was always part of the Eurozone plan, but it's basically Germany taking everybody else's debt onto its own balance sheet because now it is the final guarantor of that debt. And that is also a recipe for chaos. So, who knows which way it goes? Who knows how these negotiations turn out? But either way, it looks really, really messy going forward because neither one of these alternatives is attractive from the point of view of somebody owning euros because either way involves a lot of volatility and a lot of uncertainty. So you could say that this is the logical conclusion to a flawed plan. When they set up the Eurozone, they imposed a common currency on all these disparate countries that had their own budgets and their own national debts and very different ideas about how to proceed from there. And so you inevitably get countries in a lot of different positions and some of the positions being untenable. And that's where we are now in the Eurozone. So it was apparently always part of the plan that there would be a crisis that would lead to the final fiscal consolidation. in which the Eurozone becomes sort of like the US, with one central government that's more powerful than the constituent state governments, and one national debt and one central bank running monetary policy and everything. And okay, maybe we get there, but the process of getting there from here is going to be incredibly messy. And the end result might be kind of, from the point of view of a lot of the rest of Europe, Germany finally achieving the aims that it has pursued since the 1890s of controlling mainland Europe, So maybe they won't find that an attractive idea once they really get going with it. So who knows? But anyhow, this is the beginning. And the euro, interestingly, is up today on this news. So what that means, I don't know. Maybe it's just extreme central bank intervention, or maybe it's people betting on the German takeover of the Eurozone and starting to look at the euro as the old Deutschmark, finally, a rock-solid currency that is backed by the full faith and credit of an industrial powerhouse like Germany. We'll see. Who knows?
Yeah, it's getting interesting, and there's so many different factions at play here, and really do all the players want Germany running the show?
Well, it's hard to imagine that they do, on the one hand. But on the other hand, right now, adult supervision has got to start seeming attractive because there's nobody else that you can look at and say, oh, yeah, put that person in charge. They'll run things prudently and honestly and correctly. There's nobody like that in Europe. And so Germany, it's one of those, the trains will run on time, at least, kinds of things, and so, it's not an attractive idea, but the alternative is so scary that maybe in these extreme circumstances, people will choose it. But again, I don't know. Everything we talk about, Kerry, has so many moving parts where you can say, well, this could happen or this could happen. But then on the other hand, if this happens, and you really give yourself a headache trying to tease out all the threads in these incredibly complex situations. And the reason that they're so complex is because everybody's over indebted. And when people have too much debt, their individual situations start to spin out of control. And when a system is made up of individuals whose lives are spinning out of control and entities whose situations are spinning out of control, then the system spins out of control. And that's where we are now. You can't say anything with certainty about what's coming up, except that it's going to be very messy.
Yeah. And I guess, will they choose chaos over order? And is it just a giant game of poker, right?
Well, right now, the negotiations are that, because Greece has to threaten to leave the Eurozone in order to create the conditions in which bailing them out of half their debt or 2/3 of their debt or whatever seems like the more reasonable alternative. Because right now, nobody wants to do that, because that, first of all, that's expensive. And second of all, it sets a precedent that Italy is going to line up for almost instantly if they do it for Greece.
Yeah.
And so that's not the end of it. Fixing Greece is just the beginning of a process that gets messier and messier the further you get into it. Because, you fix Italy by taking 2/3 of its debt onto the German balance sheet. And then France will elect National Front, who either wants the exact same deal or just wants to leave altogether. And then what happens? When you've got core countries electing anti-Euro leaders, then it's really game over. Then you're back to Germany running the Deutschmark and everybody else going back to their national currencies. And you reset the clock to the 1990s, which I think you could make the case is probably the best possible outcome for all this, but I think a lot of the people in the Eurozone wouldn't see it that way.
Yeah. Well, it's really like, if you look at Germany's debt, it appears that people are expecting this thing to go back to Germany. They're betting that the Deutschmark is coming back, right? Well,
they're betting that, on the one hand, yes. And on the other hand, you look at the interest rates on peripheral Eurozone debt, Spain and Italy and the other countries that we think of as not very good credits right now, that they're also able to borrow at rates that are in some cases lower than the U.S. which implies that the market looks at that debt and sees German debt as well. They're predicting that Germany is basically going to take all of that debt onto its own balance sheet and redefine it as German debt. And that's why it's a good deal at, 1.5% for 10 years. Why else would you lend Italy money at that rate? That would be insane under any other circumstance unless Germany is the backstop and you're really buying German debt. So the market's assuming that, and the market might be right because that's one of the major alternatives here. And who knows? Again, with so much of this stuff, it's all about people under pressure making decisions about things they don't understand. And so that's how it's really going to play out: is guys sitting in a room sweating and under deadlines because the market is going to open in 4 hours and they need to make a decision now or else all hell will break loose. Just like the U.S. in 2008 when we were going to have martial law in 2 days unless we bail the banks out with $7 trillion, and so they did a crazy thing. Well, the Eurozone is now in that position. And so there's no way to know what they decide because they're people, they're guys like us under extreme pressure and not really understanding what they're doing in the first place. So who knows what they do? A really attractive vision of the world for the next few years, huh?
Not a lot of good choices to make, are there?
Well, no. I mean, when you reach the point where you owe more money than you can ever pay back, which is basically the whole world right now, there are no good options. There's only different flavors of pain and turmoil. And so that's been our situation over and over again, starting back in the 1990s when the Greenspan put was put in place, when things would blow up and then we would come in and bail them out. That wasn't a good alternative, but it was better than the stuff that would happen otherwise. And so the amplitude of the crises has been growing with time as debts increase. And so now we're at the point where we're looking at sets of choices that are just terrifying either way, but we can't do anything but choose one of them. Not choosing is still a choice, just trying to maintain the status quo is still choosing something. And so where we are now is amazingly extreme when you look at it with eyes from, say, the 1980s or 1990s. We're having to make choices about things that seem completely crazy by the standards of just 20 years ago. Yeah. And they're only going to get crazier from here.
Oh yeah, we're in the land of Oz. Hey, all of it is going to come down to precious metals, to gold and silver. So when we return, let's talk more about precious metals, where they're heading, where they are now on the Financial Survival Network.
FSN Radio. It's all about what's next.
Just when you thought gold and silver were never going higher, they're back again. All the experts and naysayers have been telling you to invest in stocks, but gold is back over $1,300 an ounce, and silver has broken through $18, and they look like they're going much higher. And when it comes to buying gold, silver, or diamonds, I go to Cloud Hard Assets. Tom Cloud has been in the business over 38 years. Call him now at 800-247-2812. Tom's service is outstanding, and you can buy with complete confidence. Order today, and you'll have your metal in your hands in 10 days or less. Tom takes the guesswork out of what to buy, and you'll buy at the lowest possible prices. And as a special to FSN listeners, you'll get free shipping and insurance. So call him today at 800-247-2812. That's 800-247-2812. Or find him on the web at cloudhardassets.com and tell him Kerry sent you.
The Financial Survival Network. It's all about what's next.
And we're talking with John Rubino of dollarcollapse.com. You no doubt heard the election results in Greece and putting further pressure on the system. Interestingly enough, gold is down today on Monday, January 26th, down around $15 the ounce. It was down last Friday. John, what's going on with that? Gold under pressure again. And, again, defying all reasonable expectations, right?
Yeah, well, you would expect the euro to tank and precious metals, at least denominated in euros, to spike on this news, right? Because the Greek elections are the crisis that they've been trying to avoid for all this time. And instead, the euro goes up and gold and silver go down. So it's either a case of buying on the rumor, selling on the event, or there's a lot of intervention going on out there where the world's central banks are trying to stabilize the system after this earthquake of an election by buying a lot of euros and pushing down precious metals. And who knows? But I think what we've seen in the last few months is precious metals being the safe haven when the crisis is immediate. You know, when the euro was really tanking just lately, gold spiked in terms of euros. In Russia's currency crisis, gold was the thing that went parabolic. You know, the chart was almost straight up for 2 straight months. And so gold is once again showing that that's where you hide when things get really crazy, that's the safe haven out there. And that it's down today, we won't know until after the fact why it's down. But I think it's safe to say that when fear spikes again, wherever that happens to be, gold will go up in local currency terms. And you got to think it'll be in the euro for a little while longer. Although, you know, as we talked about before we went on the air, the long dollar short euro trade is just really crowded right now. And maybe a lot of the crowding had to do with the upcoming Greek election. So now people have made their money on this event that they were anticipating, and they're taking their profits. And so that says nothing about fundamentals. That's just an ebb and flow of trading strategies. And so as the Eurozone sorts out the Greek thing and then the Italian thing and then the French thing, I think we'll see a lot more volatility. But whether it's up or down volatility depends on the decisions that these guys make. You know, if Germany announces tomorrow that it's just going to take everybody's debt on its own balance sheet, then that would be one thing. And if Greece announces that they just can't cut a deal with the Troika and they're leaving the Eurozone, that's another thing. And so, you know, who knows? But I think precious metals over time is going to turn out to be a place to hide. And there'll be assets that will do well as the amplitude of the crises increase. And there's no way to know what that means for next week or next month. But over a period of years, as all this works out, I think that people who have gradually over time accumulated gold and silver will be happy that they did. And that doesn't mean they won't be unhappy on some big down days going forward. But I think over time, they'll be glad that they put some of their capital in things that are impossible to create in unlimited quantities and hold their value over long periods of time.
Yeah, I happen to agree with you. And my personal feeling was that gold going up this time, silver, reaction to the immediate crisis at hand, and probably that crisis would get resolved in some way with just like you used to fix the old Model Ts with chewing gum and bobby pins. That's the way they fix the current economic system. Lots of chewing gum, lots of bobby pins, paper clips, whatever's available, duct tape, and eventually that gives, leading to the next crisis, because they're not thinking globally, they're not thinking long term, they're just thinking right now, and you know it and I know it, of just how do we get through today? How do we get through the current crisis at hand? And, you know, that's all they can think about, right? I mean, when you get down to it.
Well, that's all they've been thinking about for 20 years.
Right.
The election cycle is coming up, and I want to be reappointed as the head of the central bank. So what should I do to make that happen? You know, Don't worry about savers. Don't worry about college students or middle-aged workers or retirees. Don't worry about any of those guys. Just, get me through this cycle. And the cycles are always coming up. And so they always have immediate crises to deal with. So this will be just another in a long line until the crisis finally happens that can't be resolved. And we don't know which that'll be. You never know that until after the fact. And the Eurozone spinning out of control would be a big one. That could do it. And right now, the Eurozone, even leaving Greece aside, has deflation to worry about. They've had a strong currency for a few years, which has led to right now falling prices in a lot of Eurozone countries, which makes their already unmanageable debts even harder to manage. And so the question now is, has the tanking euro done enough? Has that been a big enough devaluation to stop the deflationary process in the Eurozone? That's the big issue. And same thing with Japan. The yen has tanked over the last year or so.
Yeah.
And Japanese exports were just reported to be up strongly lately, which is exactly what you'd expect when you cut the value of your currency by a third, right?
That's what they wanted, right?
Yeah, that's what they wanted. And so does the positive impact of a weaker currency on exports outweigh the negative impact on the wealth of savers? Because your money that you put away to save just went down by 30%, and so that's bad for you. But if you work for Toshiba or somebody, that's good for you because your job is more secure now. Right. Maybe you even get a raise. And so all of this stuff, again, moving parts everywhere, and it's hard to tease out the one part of it that dominates the other parts. But to the extent that weaker currencies help Europe and help Japan, they hurt the U.S. because it's all relative. To say their currency is weak means our currency is strong. So we should be feeling the negative effects that correspond to their positive effects in the currency war. And we're seeing that too. Corporate earnings in the U.S. are this is earnings season here, and they're starting very badly.
Yeah.
And so now you got to wonder what the valuation of the S&P 500 should be if corporate revenues are flatlining and corporate earnings are dropping in the U.S., because we're really richly valued here. We're priced for perfection, which is to say strong growth, nearing double digits in corporate earnings going forward. And if we're going to have negative double digits, what does that mean for the U.S. stock market? And at the same time, you've got the U.S. contracting the Fed's balance sheet a little bit. So we're actually tightening just a little bit right now. And that's part of why the dollar is so strong. So I think by the end of the year, I think there's a very good chance that we have to reverse course because we're losing the currency war so badly. And that we have to start monetizing debt again and cut interest rates even further. We might be in negative interest rate territory by the end of the year, as are parts of Europe and Switzerland and Japan. We might have to join that party. And so the craziness has by no means ended. Just because the U.S. has had a decent year in which the stock market is up and the economy is reporting growth, a lot of that is the after effect of a relatively weak currency for 2 or 3 years. And now we've changed that part of the dynamic. And so we'll see what happens in the next couple of years. And again, Kerry, it's all because we borrowed too much money. None of this stuff really matters. In the big scheme of things, this is just the currency war squiggles, where one currency goes down and exports go up, and the other one has the reverse. But what's really happening is that we're continuing to take on more and more debt over time, and that's making life harder and harder, and making the world economy harder and harder to manage. And at some point, it all blows up on us. And so, we have a lot of stuff to talk about in the meantime. But the ultimate event, the global collapse that is coming because of all this debt, is out there, and it's coming our way.
Yeah, it certainly is. And on that note, John, we will see you next week. Check out John's site, dollarcollapse.com. It's well worth your time and your energy. And you can always find the link on financialsurvivalnetwork.com. Make sure you sign up for our newsletter and stay tuned for our webinars. John, you be well. Talk to you next week.
You too, Kerry. See ya.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.